You are listening to chartingwealth.com for Thursday, the 10th of September 2015. We're starting off with SPY instead of the total market. Why? Because of this purple line. What is this purple line? Well, you can tell that is as high as the market. And those of you listening by audio, I'll explain to you what this purple line is. It's showing how high the market's been able to recover after the drop back on the 24th, as shown by our candle on the 24th. It's a two-day candle. That's the 24th of August. The market then sunk considerably over that two-day period, continued to go down over the two-day candle of the 26th, and then sort of up and down since then. It has, though, peaked out and stopped pretty much at 200. That is on SPY, which is a Standard & Poor 500. Market's not gotten above that. Still in a downtrend on the two-day chart. And you can see a little more what that purple line represents on the 4-hour, the half-day chart. Starting on the 24th, you can see that the market has not risen above that 200 level at all. It's touched it and then fallen right back off. Touched it at the beginning of the day on Wednesday and then fell off from it. We still have a climbing MACD, a moving average convergence divergence, and we have a positive derivative oscillator, but not a strong one. Looks like the MACD is coming together, that is converging, and it looks like the derivative oscillator is losing speed. We shall see over the next couple of days what this market actually does. Is it going to bust through the 200 line and continue to move up, or is that going to basically be a ceiling and it's going to knock off and roll over? Now remember, what's so critically important for you to take from this is if the market refuses to rise above the 200 mark on the S&P and rolls back over on the MACD on the short chart, what does that mean? Well, that means it parallels the two-day chart, which is in a downtrend, and you might have the opportunity at that point to actually get into a down move again. Remember, we called this down move before, right as it started around the 18th, and the market backed up and then rolled back over on the from the two-day chart to the 4-hour chart. Great buy-in point there, particularly on the Qs, not as much on the SPY. The Qs is the NASDAQ 100, but watch for this, okay? Now let's look at the total market. The total market, again, is doing about the same thing, sort of topping off at a certain level around 100. And same deal, we are seeing that the derivative oscillator has been losing some speed in the down move, but we're still in a confirmed downtrend. And when we look at the 4-hour chart on the total market, again, it's hitting its head right around 100 or so. And it is converging, that is coming together between the signal line and the MACD, and the derivative oscillator sort of stalling out at this point. Now we're going to watch to see if it pops above this line, this line that has so far been a ceiling for the last many days, all the way back into August. So let's continue to keep an eye on exactly what is going on. Now, let's go back to the two-day chart. We're going to revert over to the Qs. And again, just to let you know, the Qs was down 1.12% today, SPY 1.24. What is the Qs doing? Well, on the two-day chart, you can see the same thing. We could draw another line right here on the Qs, topping out, still is not moving up, confirmed down move on the two-day chart. And of course, what do we see on the 4-hour chart? A confirmed up move. And once that chart rolls back over and confirms the down move in the two-day chart, that's where you want to look to get in, okay? That is what we always look for. When did this happen before? Well, if you go back, the market was in a confirmed down move around the 17th. The market rolled over, up on the 4-hour chart and then back over. Your buy-in point was somewhere right in here, right around somewhere in the morning of the 20th of August. If you would have gotten in then, you would have done really well on this huge down move that occurred over the next several days. So let's see what the market does. It could spring up and push through. If it does, great. Then we don't have a trade there on a down move. But if it doesn't, you need to be ready to do your virtual trade. Now again, with the Qs, What is an inverse fund here? QID. It is a double inverse of the NASDAQ 100. So when the market goes down, QID goes up. That's something for you to purchase in your virtual trading account. Now, everybody hears the words virtual. We are not a stock calling service. We are an educational service. We don't give you advice on how to go out and invest. We give you advice on how to learn to invest and how to practice. So please make sure that you are doing that. Again, we're an education firm. We're not a stock calling service. We do not take responsibility for any of that, and we are not giving you market trading advice. I'll say that 100 times over. Now, let's go ahead and range back out to the 2-day chart, and let's look at gold. Gold was down today also, just like the markets. And again, gold has crossed over going down. It actually crossed over, not the MACD yet, but it crossed over the 2-day trend line way back around the 26th or so. And it then sort of has slid sideways over the last 4 days. It has rolled over going down on the 2-day chart, not yet crossed the MACD, but you sure see the derivative oscillator losing a lot of speed. That's the light green bars, and the MACD appears to be getting close to crossing. Now let's look at the 4-hour chart and see what we see. Well, you can see when it crossed over and how, again, as we've talked about, how good the 4-hour chart is in telling us what's going on in the market. We can see if we track it, when it crosses over going down, it typically goes down. When it crosses over going up, gold typically goes up. This is a really good chart. Again, consider it for your virtual trading. You can buy an inverse gold fund. When I say buy, with your virtual account that you've set up at any number of brokerage firms, any of the online brokerage firms will let you sign up and set up a virtual trading account. Become a virtual millionaire overnight. Put the money in it and then start trading and see how you do. And again, an inverse gold fund would have done quite well if you had hopped in around the 25th of August and continued to watch this barrel down. Once it turns over and goes up, might be a time for you to buy in. So again, continue to pay attention to what's going on in gold if you are interested in that. Folks, there's where we are with the markets. We appreciate you joining us every day. We'd love to hear from you. Follow us on Facebook and Twitter if you haven't signed up for our training and for our daily chart review. Well, you need to do so. Just go to chartingwealth.com and sign up for the email newsletter. We won't sell your name or email address to anybody, and we won't send you a bunch of junk. It'll be stuff you can use. Thanks so much for listening to us at chartingwealth.com.